This week is absolutely massive, like Godzilla stomping through Japan kind of massive. It is a really big week because you've got central banks all over the world, including in Japan, by the way, reporting kind of their latest expectations for the future, what they're going to do with their interest rates, what their monetary policy is going to look like. And as you can probably imagine, when you have the Fed, the Swiss National Bank, the Bank of Japan, the Bank of Australia, right? ECB, Bank of England, all of these putting down their cards, laying down on their cards on the table, as you can probably imagine, it's going to cause some volatility. And in this video, I'm going to help you prep the best I can, at least how I'm doing so, for this week and what I am looking for as we jump into this very heavy news week. So as we get started, I do want to just ask a favor. If you could hit that thumbs up button and subscribe, leave a comment, that sort of thing. It really helps me out with the YouTube algorithm. And let's get started. So first off, I wanted to take a look at the overall market kind of reaction here this morning as we kick off the week. You can see indices are in the green. And here's a quick recap as to my best guess as to why. First of all, it's a bit of a bounce back from last week's sell-off, but also, more importantly, I think the NVIDIA conference that's gone on has relit some of the excitement as they've announced products and plans and all sorts of things that they do see coming. And the market is all about NVIDIA right now. NVIDIA is the market is NVIDIA. And if NVIDIA goes up, the market goes up. If NVIDIA goes down, the market goes down. Regardless, we'll keep an eye on indices this week, as I do think that while yes, this is a great start to the week for indices, there's just too much in front of us that could completely change the story, either continue to the upside or completely reverse it. We'll just have to wait and see. I'll get more to that in just a moment. At the same time, the dollar index is bouncing really hard. We're in the green there for the dollar as well. And usually, not always, but usually when you see both these charts moving up at the same time, it is a bit concerning because, again, a strengthening dollar could imply interest rates are going to stay higher for longer, and that's going to take some of the wind out of the sails for stocks. So keep an eye on this. You're seeing both of them rally at the same time, and that's always a bit of a cause of concern. The euro is selling off here this morning amidst that dollar strength. Same thing with the pound. And the gold market, despite the dollar strength, is doing just fine. We're trading at 21.60. Perhaps signaling that this week is still kind of a little bit wobbly ahead of these major central banks reporting their plans. Finally, oil is flat. It's all over the place, but I do have a bias on it, which maybe we'll talk a little bit about later on in this video. So as the captain of this ship, I want to just take you a little bit about our navigation here this week. There's a lot to go through, and I'll try and keep it brief here. The Bank of Japan is speaking, of course, the governor OANDA, if he has something to say about the Bank of Japan. This is actually such a huge one. This one could be massive today, but they don't have sort of a set time. It's kind of an all-day tentative event that can go on for the Bank of Japan. We get the press conference tomorrow, so that's probably where we'll get some volatility. Same thing with the RBA. That's, of course, the Australian Central Bank. And things really jump up a notch when we get into Wednesday, where we hear not only from Jerome Powell during the press conference, but we also see the economic projections, which include the dot plot for where the central bank sees interest rates going. So that one will obviously be a huge market mover on Wednesday, but it actually doesn't stop there. We have the Swiss National Bank. We also get the Bank of England, which will be a key number here. We get the bank rate votes. Of course, the way the committee there in the Bank of England works is they publish their votes on whether or not they think they want to hold, raise, or cut interest rates. So this will be huge if you're a pound trader or if you trade the FTSE, the UK 100, etc. And also just for gold traders in general, there's just so much to look out for this week with all of the central banks coming out. We also get, of course, some key economic data out of the US. We get unemployment claims on Thursday, PMI numbers, and of course, just to a soft end of the week, we get the Euro Summit on Friday, and we get the Fed Chair Powell speaking again on Friday. It's a monster week. So remember when I said Godzilla stomping through Tokyo and he's blowing up buildings? Yeah, that's this week. So stay tuned for that one. Let's get back to the charts. So jumping over to the charts, here's something to consider as we go into this week. The dollar index, which was trending up, has given back some of that trending nature and is now kind of trending to the opposite side. In fact, we're coming in as we speak to a level of resistance. But let me just reiterate something. This week, technical analysis is completely second to fundamentals, because what central banks here have to say will excite the market. And if you have a support or resistance level and they say something exciting, completely toss it out the window, because it means nothing if the central bank changes its tone. Let me give you an example. If the Federal Reserve comes out and they say, actually, we don't think there's going to be 3 rate cuts anymore, we think there's just going to probably be 2. If that comes out, get ready for your resistance to completely get smothered by a massive rally, because that would change the fundamental story. So fundamentals are absolutely king this week over technicals, but despite that, we are still trading at a level of resistance. We'll just see if this actually truly can hold here and we can roll over and continue this downtrend. Perhaps the Fed does say we still see rate cuts on the horizon. It is an election year, so perhaps they'll be a little softer on trying to keep interest rates coming down overall. That's been the story. If that story changes, the dollar story changes as well. But right now, I do think that we could see a continued push lower on the dollar. That's my base case this week, but we'll see if something changes on that front. With that said, as we take a look at gold here, the price is shooting up really strong in the last few weeks. I am and have been long, and I actually marked out where the edge finder first got bullish, and I'll show you proof in just a second. The edge finder got bullish right around here, and as it pulled back intraday, I went long, and I had no idea the kind of trade that I had on my hands. This thing became a monster, and due to the way I trail stops, it ended up being a really big winner for me. At this point, I'll show you my trades. I'm floating around $5,300 on this trade. I'm also long silver at the same time, and so it's been going really well. What I'd like to see here this week is that, of course, if we get weakness in the dollar, it's probably going to be very good for gold. And if we do get strength in the dollar, it's not going to be necessarily good for gold. In fact, it could cause me to trail out of my trade. I do have 2 longs open on gold, one trade here, the other trade here. If we do trail out here, I'll be taking a very small loss on this one and a nice sized win on this one for a pretty good net profit. So we'll watch out for this. But again, if we hold support here on the daily chart, I could see myself holding gold and continuing to trail stops if we get that set up. Let's now take a quick look at the commitment of traders data to see where institutional money is still positioned. So what we've got here is we've got the Nikkei actually taking the #1 spot, which is really interesting. At the same time, you've got gold, oil, silver. I love seeing these things at kind of the top. It keeps me confident that I'm going to stay long these assets, and I don't have an oil position, but I am considering one. So I'll talk about that in just a second. The US 30 is up there as well, the pound, and then on the sell side, you've got the Australian dollar, yen, Swiss franc, bonds, CAD, etc. Now, if we take a look at the latest filing, this section is, in my view, more important than the top section. It shows us everything we need to know. It shows us the latest movement in terms of institutional money. What did they buy? What did they sell on the latest weekly filing? So as we take a look at this, for example, we can see the US dollar. They actually increased their position ahead of this week, which is really interesting as we go into such a pivotal week that they've moved more strongly into the dollar. They closed a very small amount of long contracts, but they they really decreased their short contracts. That resulted in a pivot more to the bullish side. And so again, that is something to consider on that front. In terms of the net positioning for the US dollar, we are still leaning bullish overall from institutional money. The Dow also saw some of that action as well. The yen, the euro, the ZAR, the bond market, the dollar, silver, platinum, and of course the Nikkei, which was the big winner here on the COT data. Flip it around, you can take a look, the SPX, gold saw slight selling as well, the Australian dollar, Swiss franc, CAD, Kiwi, and there you go. That is your weekly filing for the commitment of traders data. By the way, if you would like to try out the Edge Finder, there's a link down below in the description to sign up for a 30-day access trial. If that's something you're interested in, make sure, don't miss out. Click that link down below. You can apply for a trial, and someone from my staff will reach out to you personally to get you set up with a copy. Next up, we'll take a look at the S&P 500, which continues its overall upward trend. Really strong upward trend, by the way. And it's been tough to watch because I've been looking for a pullback opportunity, but with this rally, perhaps there's just not one in the cards for now. I'll continue to have to wait on the sidelines, but I also think it's a little too early to speak on this because this week, of course, we have so much market news, and with the Fed speaking, with Jerome Powell speaking, and other central banks, if we get anything that is, rattles the cages a little bit, we very quickly could see the S&P 500 retrace for that, what I believe believe to be a much needed pullback on the higher time frames. This is the daily chart. It's a very clean upward trend. I'm definitely not fighting it. I'm not short. I'm just waiting on the sidelines when it comes to the indices. Of the three right now, the NASDAQ is also jumping up here 1.59% at the time of recording. I actually have the most strength and most conviction in the Dow. I'm looking for a pullback on this one, and I'll show you that really quick on the top setups page. Now within the Edge Finder, we have many different categories that are scored automatically. The data gets pulled in and generated a bullish or bearish signal for all different categories. And then finally, our assets get put on the left, sorted by most bullish to most bearish. That was a lot, but let me break this down. I'm going to select something specifically from this list that I happen to know is bullish, US 30. We can take US 30, add it to our list, and we can select this and isolate it. I love that you can now do this, by the way. If you have the Edge Finder, click this little button and you can just select which pair you'd like to go through, or chart or asset if you're looking at currencies, commodities, indices, whatever. We get a bullish reading on the US 30, a +6 reading. The COT, the Commemorative Traders data, really bolstered our score here, gave it a +3 overall. So that's one of the leading contributors, but we also have all this other stuff. CPI, not a positive thing, right? The inflation's been relatively hot. That's not great for the Dow. So we're getting a -2 in that category. But other areas tallied up are giving us a general overall bullish read, especially thanks to the Commemorative Traders data. So the Edge Finder looks at all of this different market data and generates a bullish or bearish outlook. What do I do with this? Well, I'll show you on the technical chart. So the Dow of the three has actually been an underperformer. When I say three, I'm talking about the NASDAQ, SPY, and the Dow. The Dow's been kind of a laggard of the three in recent times. But I do think that if we do start to see Fed rate cuts, it's going to be a very positive thing for the Dow. As a lot of these companies, they do have some exposure to debt, and they haven't been participating in all of the rally that has been so tech-centric, right? The rally recently has been very centralized on technology stocks like NVIDIA and companies in the semiconductor space, right? That's been what's pulling the market higher. And it's not a huge contributor to the Dow. So we haven't seen that huge rally. But in my personal view, the Edge Finder is giving me the signal. I need to wait, however, for a technical setup. I like this area, 38,500 for the Dow. I'll be watching for a pullback on this as a possible trade here this week. If we get some expanded volatility, that should be really interesting. And that's, of the three, my favorite of the indices right now. Now that could change, but for now, that's what we're getting confirmation from on the Edge Finder. Now I could expand my search here. If you want to do indices, we could go NASDAQ, SPX, and there we go. Also, we've got the DAX in there as well, which is killing it. So you've got the DAX in there, you got the Dow, but you can see the other ones are getting neutral readings. So for me, that's not really interested in NASDAQ, S&P. As a systematic trader, I wait for trades to come to me. I do not force trades. So for me, I'm looking for the Edge Finder to give me that confirmation, which I'm getting on the Dow and the DAX. And so I'm watching for that. That's a trade setup that I'm looking for this week. We'll see if we can get that going forward. Also, this week, we are very likely to be taking a lot of trades. Now, a lot of traders, they'll shy away from news events. They'll shy away from trading during news weeks, and they'll just walk away. Not us at A1 Trading. We trade, when I say we, there's a couple traders here, but between myself, Ivan, and Frank, we actually love trading during these times because as fundamental traders, I'm not afraid of news. I love news because news helps me to build solid confirmations. And by the way, news automatically gets ciphered into the Edge Finder's output scores, and we get some wonderful news setups during news events. So I actually love news weeks like this one, and I'll be looking for setups throughout it. If you'd like, you can join our free Discord channel. We'll leave a link down below in the description for you to join up inside of the Discord channel. And once you're in there, you'll get some free analysis shared to you each day. And if you do choose to, you can sign up for the VIP signals where you can get access to the trades being shared day in, day out by myself, Frank, and Ivan. So if you're not already in there, check it out. The link will be down below in the description. Here's a quick look at seasonality when it comes to indices. We're looking at the S&P 500. The S&P 500 has been a little lackluster here in March overall, but it's bouncing back here today. So I imagine this number actually will tick back up. This dotted line represents the performance of this particular year. So we've been really strong overall. We've given back just a little slight amount of that in the month of March. However, we're still expected overall seasonally to have a positive month month in March, so perhaps we do see a bit of a swing back, and it's actually expected to pick up here in the next couple months. That's based on the last 10 years, historically speaking, as well as the last 5 years in gray. I know a lot of traders in my audience also trade gold, myself included, so let's take a look at gold's seasonality as well. This month is actually expected and delivering in terms of gold historical tendencies to be positive. So I love to see this, and it does kind of add confirmation to staying long for me when it comes to seasonality. We're also expected to be slightly positive in the month of April, but in the last 5 years, April's actually been a very good month. So we'll continue to watch this seasonally. Of course, if you have the Edge Finder, you can select any of the charts that you'd like, whether you trade currencies, commodities, etc. Speaking of commodities, we also have some interesting stuff going on with oil. I showed you just a second ago, if we go to the top setups page and we add oil to this, let's go USO, we can add USO. Oil is also getting a bullish reading as well. So when looking at across the board, we've had hot readings of inflation. That is actually a bullish signal on the Edge Finder's algorithm for commodities in general. So we're seeing a tick up inflation. High levels of inflation could contribute to rising oil prices as well, and vice versa. So we'll watch that. Again, I do like oil as a possible setup this week if we do get a pullback. I'm watching some key levels like the 80.5 area or the 80 round number play on US oil, that's WTI. So I'm watching this for a pullback this week for possible entries on this side of things. And again, just a reminder, if I take that trade, it will be shared inside of the commodities trade section within our Discord. For the currency traders out there, let's take a look at what's going on. We already talked a little about the dollar, but that dollar strength could be coming in, and if it does, it could roll the euro over. If we take a look at the daily chart, the euro has been kind of rising here recently. And you know, one thing, I'll point out retail positioning in just a moment, but retail traders as of yesterday were very much long euro dollar. So that actually has a little bit of concern for me that this could roll over this week. We'll have to keep an eye on that one, but we'll come back to retail positioning in just a moment. Here's the pound pulling back, maybe coming down to now to test the 61.8% retracement, but I don't really have a confirmation on either one of these trades. If we go here, what I'll do really quick is I'm going to swap over to major currency pairs, and you can see Euro USD is hovering around bullish, but what's holding it back from getting positive right now is that retail positioning is not really leaning one way or the other, so we're not getting a signal on that front. At the same time, you've got the dollar Swiss, dollar CAD, but the only ones that we're getting bearish setups on are actually Kiwi dollar and Australian dollar. Let's have a look at those. So here's the Australian dollar trending down overall. It seems to have found resistance around this area, and I do kind of like this for a possible sell setup if we get a return back. Kiwi dollar, look at this, similar story. Perhaps if you get a break of the lows here, guys, this actually is really interesting. Watch for this signal here this week. If you get a break of this level, you very well could get something like this, and I actually really like that trade. If you're a dollar bull, that would be, for me, top prospect for this week. Would actually be selling Kiwi against the dollar, or you know, watching gold. But for me, I'm generally more bullish on gold right now. But again, my software is leaning generally kind of flat, so I can actually add metals just so we can see where gold falls on this on the algorithm. You can see it's getting a neutral, but again, keep an eye on this. If you have the Edge Finder, just look for scores to get more polarized here this week. Could definitely happen with all of the news and volatility. Here's some of my current positions as we close out the video. GLD, SLV, I've got a Chinese stock market position still running, doing pretty well there, and GDX puts that I've sold are doing okay as well. If you'd like to sign up with the broker that I use, WeBull, there will be a link down below in the description, and if you are outside of the US, or in the US, there's some great brokers and sign up perks down below in the description. If you use those referral links, number one, you'll be supporting my channel, and I very much appreciate it. If my videos help you and you're looking for a broker, consider helping me out. And again, I thank you for that. But also, more importantly, there's some great sign up perks available to you. There's welcome bonuses, there's free shares when you sign up with WeBull, there's all sorts of good stuff. So check it out down below in the description, and hope that is helpful to you. Thank you very much for watching today's video. If you enjoyed it, make sure to hit that thumbs up button. Trade safe this week, and we'll see you next time. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.